This just happened. This loan was denied by another lender, and I really think it's something that we can all learn from. So here's what happened. One of our real estate partners called in distress late Friday. She was notified that her client, who was supposed to close on their home loan, on the home that they were purchasing in 7 days, they had their loan declined by this really big nationally recognized bank. And she was just like, oh my gosh, can you just please talk to the client and see if there's any other options before they have to back out of this deal. Okay, so here's the deal. Husband and wife relocated here from another state late last year. And by late, I'm kind of thinking it was about September. And so from that, two things to really kind of hone in on. As a loan originator, this would have been like red flag, bing, 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 all day long with me and my team. But it wasn't with this big bank. So the wife is self-employed. Okay, first red flag, right? The husband is a wage earner, flat salary, but he's bonus eligible. Well, guess what? He didn't earn bonus last year, so you can't use that bonus in the income calculation until he actually earns it and has a history of earning it. So two things had happened when that lender pre-qualified them. Yes, that lender pre-qualified them, sent them a pre-qualification letter. They went under contract, were under contract for 3 weeks, getting ready to close in 7 days, and then the lender comes back and says, oh yeah, sorry, your loan's declined. I mean, just tears everywhere. It's awful, awful, awful. As we started to kind of dig into the details, the issue is that the wife is self-employed. Now, her business is a type of self-employment business where it doesn't really just translate state lines. So it's a kind of business where your clientele is based on a particular area. So that's another red flag, because that's something that the lending guidelines are going to require an underwriter to document is, are they comfortable that that income is going to continue without being impacted negatively by the move to a new state? So when we have businesses that are based on clientele, think of it for you as a real estate agent. If you move to, let's say, Texas, and you don't have a sphere and you don't have a lead gen system, it may take you some time to actually be able to build out your new business there. It's no different for this gal. So anyway, we get into the detail. We figure out a way to actually be able to approve her. So that was awesome. The bad part of it is that the income based on her tax returns, even though we were able to come up with a solution, the income was not enough to meet the debt to income ratio requirements on the home loan. Now, as we're starting to walk through this with her, she's like, but I make X dollars per month. Well, again, this goes back to the number one lesson and the number one point, talking point with our self-employed borrowers is the lending guidelines do not use your gross income to qualify for the usable income for the home loan. So the lending guidelines do not use gross income for self-employed borrowers. It's a different calculation. So she was Schedule C, which is a sole proprietor type of tax filing. And on a Schedule C, again, for gross receipts, she might have earned, let's say, $500,000. But guess what? She wrote off $450,000, right? So line 31 of the Schedule C is the number. And that, when we went through the income calculation, that is what put her in a position where the debt to income ratio was too high. Now, it was very interesting because what this big bank was telling her on why her loan was declined wasn't really the case. The bottom line was we figured out a way that we could meet the lending guidelines and still use her self-employment income because she'd done this job in various states for 22 years, so we could get our arms around it. But the bottom line was the tax returns did not support the income that was needed to qualify for that price point with the down payment they were doing, etc. So it's heartbreaking, but I share this with you because it's one of those things that you working with a trusted lender. And sometimes with these big banks, you guys, you don't know what you're getting. I know that, you know that, but the client doesn't always know that. So use this story to be able to just share, especially if they're self-employed. So here's what I would say. If you have a self-employed client, push them, whoever their lender is, to get that loan underwritten by the human underwriter. As a reminder, this is what we're doing across the board now for all of our clients because we are so passionate about making sure that when our clients are out there, they're truly pre-approved. All we need is that preliminary title report, we need the appraisal if one's needed, and we need the contract. So, but a lot of lenders still aren't doing that. Had a human underwriter looked at this loan pre-qualification and looked at those tax returns and got into the story, the loan would not have been approved. Just wouldn't have been. And we could have saved all of these people the distress, the heartache, the agent, the seller, everybody that's involved. I cannot stress enough how important it is to work with an experienced lender right out of the gate, especially if you or your client is self-employed. I mean, I'm telling you guys, it's a whole nother animal for self-employed people. It's literally, for this client, it was the difference between getting a house or not getting a house. I know clients often think it's going to be convenient to work with their bank or credit union, but show them this video. Experience matters more than convenience and more than interest rate too, because if the loan can't close, then rate is irrelevant. I've been lending for more than 26 years. I have an amazing, experienced team that focuses on the details. We'd love the opportunity to work with you and your clients from the start for a smooth closing. If you have questions, please leave a comment below, and don't forget to share this video so we can all have successful closings and happy homeowners.